Everybody, Uneducated Economist here. Nice. We got 4 people already have joined in on today's live stream. The second one we're doing because we were out here at 2 o'clock in the morning doing live streams, and here we are again at 11:30 doing even more live streams. So we're like nonstop live streaming here, trying to break this stuff down so that we have a better understanding of what it is that's going on within the economy. Today I'm going to talk a little bit about lumber and the home builders that are out there. This is probably going to be one of the weirdest things to think about as far as what is taking place within the market. Here you have builder confidence in the toilet, right? Let me what does this say? It goes builders confidence in the market for newly built single family homes was 39 in August, down 2 points from the downwardly revised reading of 41. So it was already revised down, and now the new reading is below the revised downward shift from July. So home builders' confidence is like, hey, we are not confident at all that we are going to be able to build a house at this in this current economic environment, and going into the future be able to sell that house because the buyer traffic is simply not there. Right? And now this makes a lot of sense. Interest rates are elevated. With elevated interest rates, people are simply not in a condition in which that they can even afford the elevated home prices that are out there. So what ends up happening is the builders have backed off on their construction that they are doing for new homes. Their speculation has eased back quite a bit as they are worried about not being able to sell that house into the future, which has tightened up the inventory and elevated the prices, which has then put their stock value at a higher value. Like, think of the builder's confidence is not positive, it is negative, and their stock value is at all-time highs. Like, look at Lennar, look at D.R. Horton. Right? I left links down in the descriptions to some of these home builders. Just Google like national home builders stock, right? And just go and find the stock tickers and go and look at all of them. Almost every single one of these things are at their all-time highs, maybe just slightly down since the end of last year, like over the last maybe 4, 5, 6 months, right? They may not be at that peak, but over the course of the last year, or especially over the course of the last 5 years, they are all sitting at all-time highs right now. So builders stock, like had you invested into the builders while they were at low confidence, you would have actually killed it in that stock value moving up. Now, something that I had brought up a while ago, I was saying, man, if people are not building, if they are nervous about building, if they think that there is not going to be buyers on the other side of this project there to buy this project or buy this house, then most likely they are going to be very nervous about trying to start that home, which is going to leave a limited amount of inventory in the market once the future comes, right? If you're not starting, you're going to have a gap in production. And this is exactly what we are experiencing. I said back then, if you are building a home, you are going to have a product that not a lot of people are putting together right now. This is what we are experiencing. Shortage of inventory, shortage of homes out there. If you have a home, you have something that you can most likely sell for an elevated price. Now, granted, there are a lot of people who are probably going to argue with this saying homes aren't selling, but that's not true, right? Homes are selling. They're not selling at the pace that they once had. And that is very difficult for a lot of people to then internalize, saying, no, we used to be able to sell a house in a matter of a few hours. Now they sit on the markets for weeks and months, maybe even 6 months or closer to the year. Well, that's the way the housing market used to operate, right? That's not new. That's the old way, right? That's the way that it used to be. And that would be considered normal. Going on here, it says, challenging, in exactly what the home builders are saying here, challenging housing affordability conditions remains the top concern for prospective home buyers in the current reading of the HMI, as both present sales and traffic readings showed weakness, said the NHA, the National Association of Home Builders chairman, Carl Harris. A custom home builder from Wichita, Kansas. The only sustainable way to effectively tame high housing cost is to implement policies that allow builders to construct more attainable, affordable housing. Now, I've been saying that for a long time. The only way you're going to bring housing down is to bring more inventory. The only way you're going to bring more inventory is for the confidence to be there with the builders to say, yes, when I finish this project, it will be able to sell for the projection that I have for it right now. Like if I am believing that this house is going to sell for $450,000 when I'm done with it, and they're confident that that's going to take place, then they'll be willing to go forward with that project. But if they're sitting on a house that says, hey, I'm believing that I can sell this house for $450,000, but the reality of the situation is they have to sell it for $410,000 or $390,000, then they're going to be very, very cautious about starting that project. And that's the condition that they are now in, which limits the inventory, which raises the price. So it's exactly opposite of what it is they feel. This is the reality of feelings, man. That they are not facts. Feelings are not facts. Because you feel that the market condition should be deteriorating and you don't start the housing project and the house prices go up, it's exactly opposite of what it is that you're feeling. You thought that the housing price was going to crash and that's why you didn't start the house, but yet what you feel and what the reality of the situation were two different things. I mean, their stock price is now elevated to the highest level that it is in like their all-time highs, essentially. And their confidence is in the toilet. Does that make sense? Right? I mean, now, granted, there is an argument for that, saying that their stock always looks best 2 weeks before it crashes. Right? So, hey, that could be set up right now. That could be very, very much the reality of the situation. But as far as I can tell, I don't see where home prices are coming down. In fact, most people are of the mind that there is going to be interest rate cuts coming in September, which is going to put even more pressure on the elevated home prices, as more people are going to be stepping up to increase the demand. See, I mean, you have two options: increase supply or increase demand, or decrease demand, whatever way you want to look at it. But supply-demand imbalances is really what the factor is. And when you think about lowering interest rates, what you are thinking about is increasing demand, which is going to not add to supply. It's going to cause the prices to move up. And so why is it that anybody is going to feel that there's going to be lower housing prices going into the future? I don't think that's necessarily the case anymore. Or else builder stock prices wouldn't be elevated, knowing that they are the ones who build a product that is expensive. Like if you had an expensive product that you built and people are like, hey man, you have an expensive product that you build, and you're like, yeah, I'm a little worried about, maybe whether or not it will sell. And other people are out there going, I ain't. Here's a bunch of money. I'm buying into your company, right? Because you are the only one who's building an expensive product. You see, it's always it's backwards from what everybody seems to think. Let's see. The HMI index charting current sales conditions in August fell 2 points to 44, and the gauge charting traffic prospective buyers also declined by 2 points to 25. Now that right there is probably the most important one. Right? The buyer traffic, because it is so negative. The rest of them are almost positive or very close to. When you think about it, this index is based off of 50. Anything above 50 is positive. Anything below 50 is negative. There's links down in the description to this too. Right? Now, the HMI index charting current sales conditions in August fell 2 points to 44. So sales conditions are negative, right? Again, 44 is below 50, so that's the negative. Right? The gauge of charting traffic of prospective buyers also declined. So prospective buyers declined by 2 points to 25, which is extremely negative. And the component measuring sales expectations in the next 6 months increased. Right? Sales expectations increased 1 point to 49. So it's almost positive. See, people are they're right at the edge. They want to buy. They want to buy, but they don't want to sign the deal on a higher interest rate, so they are cautious and they are holding back. But they are itching. They have been waiting. People sitting around Waiting to buy a house is now accumulating the pressure of people who want to buy a house. It's not like those people disappear. They may have given up. They might be frustrated about it. They may not be capable of being there, but they're wanting to buy a house, right? Whether they're capable or not, they want to be there. And if the interest rates come down, their capabilities are now increased to the possibility of actually buying that house. It increases the demand. And so with people with the anticipation of a September rate cut, you are going to find people waiting or hoping or dreaming that that house is going to be right around the corner for them, and that is going to increase the demand for that home. And when you have supply-demand imbalances, like very much like we have right now in the housing market, you're going to see the elevated prices. And with elevated prices, the people who produce the product with the elevated price are probably going to do very well, regardless of how they feel, right? Because the feelings don't match necessarily the reality of the situation when it comes to their stock value, when it comes to the product that they sell, right? Now, granted, this all could change very quickly, but with the idea of lowering interest rates going into the future, I doubt it. I doubt that's going to be the case, right? And take a look right now. It's hard to see this, but right now, lumber is absolute and extreme shortages. People don't know this yet, right? Because there's no reports on it. I've been reporting on mill curtailment. That was the preliminary reports that you're going to find, because there's nobody out there who's going to discuss it until it's an issue. Once it's an issue, now they have something to discuss, but by that time, it's already too late. I'm telling you now, the main guy who does the buying for the yard where I work is telling me that 2x8, 2x10, 2x12 longer lengths are almost impossible to source out. They are very difficult. They're not readily available, and it's getting harder and harder to source these things out as far as timelines go. Like, you can say, hey, when am I going to get it? Don't know. Like, it used to be a time you say, hey, man, I'm short today, but I'm probably have them next week. You know, you had a timeline ahead of them. Now, we don't even know when they're going to be coming in. And this is the signs of what is going to be some serious shortages if those rate cuts do actually take place, or if there's enough belief of a rate cut taking place and the builder confidence then turns positive. You are going to find that there is not enough lumber within the system. Those prices are going to skyrocket, and it's going to be expensive to build a home again, and there's no way that those prices can come down. The replacement cost for a home will go up. So whatever it costs right now, whatever homes are selling for right now, it's not going to get any cheaper. Not at this point. Right? Lumber's as cheap as it could possibly get right now, and with shortages in the system and selling at $500 per thousand, and more mill curtailments are being announced just about every single week, you know that it's only a matter of time before this market snaps. I'm warning you now, like, do not blink. You will miss this. You will miss it. And I'm trying to tell everybody about it now so that they can prepare for it. I mean, if you are an individual who is anticipating on doing some projects going into the future, you got a garage project, you got a decking project, you got other projects coming into the future, you're going to want to keep a close eye on that lumber prices. There is shortages happening within the market today. You're not going to find the news articles on it. I'm the only one who's probably going to be reporting on it, unless you can find somebody who's in another lumber yard who's experiencing the same thing and sharing their anecdotal evidence with you. But I've been warning for this for months, years even, right? It's just a matter of time, and it's going to happen. And you can see, like, just think about like how the builder's confidence is completely opposite of what it is that's taking place, not only with their product, but with their stock price as well. All right, let's go find the super chat. All right, N499, thank you so much. Hi, Simon. If BTC stonks is holding this price because expected rate cuts, that won't happen. Why not wait after September 14th for market to drop to buy? Are you relating the BTC and stock prices to the expected rate cuts? Like, here's the thing. I don't necessarily look at the markets, and I mean, I see like the extreme moves, but I'm not looking at like BTC as being correlated exactly to an interest rate cut. Right? Like BTC has all kinds of factors that impact it, right? Beyond just that of an interest rate cut. I mean, I'm sure it has its, its influence, but to me, like, I mean, to force that correlation as opposed to just being accepting of what it is, like, I mean, I don't know if that's what you're doing or if that's what you're expecting from it, but to me, I don't look at any kind of expectations coming from BTC. If I did, then I would be, timing my purchasing of it or something like that. That's not what I do. Like, if you're looking to time your purchase of it, um, good luck. I'm terrible at that. I've never been able to time the markets very well. I mean, I can call out lows and highs at times, especially when it came to like lumber industry. That was pretty easy for me to do. I don't know how the hell you were going to make money at that. Like, buying into the futures market is a very difficult thing to do, considering it was, 200 and, you know, hundreds of thousands of board feet of lumber at a time, and like, lots of. Anyway, moving on. When I would consider, when I would think about like when it comes to the Bitcoin, right, is the networking effect that it is really having, right? How that is growing every single year, how more innovations, more companies, more adaption, it's the idea that it's not going away, right? That's like the important part about understanding Bitcoin, is that it's not like people said it's going to fail, it's going to disappear. That's not the case. So that now that we can, basically put that chapter away and say, hey man, it's not like it's going to go away. So now that it's definitely here, how do you like accumulate Bitcoin? What's the point of buying Bitcoin? And so when I think about it, it's just like, okay, so Bitcoin has very little possibilities of actually being a world reserve currency. But yet, the ability for it to do transactions all across the globe are absolutely extreme, right? Like this is like one of them, like almost like a perfect idea for doing transactions, except that it's slow and cumbersome and all that other, stuff that goes with it. So is it important to be like a Bitcoin holder? Well, yeah, I do believe that. Like the network effect is growing. So like, why wouldn't you be part of this? And when it comes to buying into it, it's very difficult to say, is now the time? Is 16,000 the time? Is 60,000 the time? Like, when is it? When do I buy in? How do I know that I'm doing the right move? And that's very difficult because Bitcoin is extremely volatile. And so trying to buy in at the right time with Bitcoin is like, it's trying to hit a moving target. It's very difficult. So I asked one person that I know who knows the most about Bitcoin, and that's Lynn Alden, right? And so I was just like, okay, Lynn, like, when is the time to buy Bitcoin? How do I know? And she said to me, like, this is a personal conversation that we had. Like, all nighter was there, and and basically what she says is you have to dollar cost average for at least 4 years. You dollar cost average for 4 years, and there's no time in their economic model that you would have come up short, right? You would have had gains. So I take that into consideration. I mean, Lynn knows a hell of a lot more about, economics and Bitcoin and all kinds of stuff. I mean, she's been in the game a hell of a lot longer than I have doing this stuff. So when it comes to understanding Bitcoin and when to buy, as far as, investing and doing all that, that's what I do. Dollar cost average, and I forget about what the price is. I just buy a little bit all the time. Every time I get paid, I might, well, not every time, but, once or twice a month, I'll throw $50 at Bitcoin. Very small amounts, stuff that I don't even, really recognize that I am missing. Because like once the 50, like it hurts the moment you do it, but then after it's gone, you don't think about the $50 anymore, or the $20 or whatever it is. And to me, that's like leaving Bitcoin with very little expectations and the possibilities of doing quite well. Right? So you can just follow that strategy and just kind of forget about things. All right, let's talk about lumber or something. All right. Whatever happened to the central bank digital currency? I don't think they'll use Bitcoin, just the blockchain it runs on. Pax America I don't think so. I think what you're going to end up finding is that they are going to regulate stable coins, and that they are going to back stable coins with dollars, treasuries, even things like money markets would hold, like maybe even commercial paper, right? Like things that are going to be very close to cash, very close to liquid, or very to be able to liquidate to cash very quickly. And then they'll just remove cash out of the system, and we'll use central bank digital currencies that will actually be stable coins instead of like an actual like Fed coin or something like that. Because the Federal Reserve would have a very difficult time actually having a central bank digital currency. Their charter is not really giving them the legal authority to operate in that kind of fashion. Like injecting money directly into the system through like their issuance right to a wallet, it they're the way that the Federal Reserve is structured, they can't do that. That's not legal, right? For them to do that, it has to route through a different channel. So like even when they go to buy treasuries, they don't buy the treasuries directly from the government, right? Like everybody says they're financing the government. Well, yeah, they kind of are, because they're buying all these government bonds. But ultimately, they have to buy those bonds from the secondary market. So they already have to be purchased for the Federal Reserve to be able to go and purchase them. So they can't go directly to the government and buy them. That's monetizing the debt. They can't do that. They have to go to the big banks, who are the primary dealers, who have already purchased the treasuries from the bond auctions. They have the treasuries. They go to those big banks, buy the treasuries from them, and this is how they stimulate the government through the secondary channel, right? Because otherwise it would be considered monetizing the debt. But if you're buying something that has already been purchased, then you're not necessarily monetizing the debt. Like this is their excuse to get around it. So if they were to basically, inject money directly to the system, that would be, again, monetizing the debt, because essentially they would have to get the treasury from someplace and then put that money out there. And although they probably could come up with some regulation changes from Congress, that's what it would take, is a congressional act, right, to change the way that they are conducting themselves. However, stable coins, Federal Reserve can just go on conducting themselves the way that they always had. Those stable coins will be regulated by Congress or the government itself, right, being backed by the Federal Reserve's notes, right, the Federal Reserve's liabilities, the dollars, and now monetary policy being conducted by the Federal Reserve would transfer right into those stable coins. Everybody is continuing on doing business the way they normally had anyway. Right, so there's no changes, there are no congressional acts, none of that stuff needs to take place. And that's why I think it's going to be more of a stable coin issuance as opposed to a central bank digital coin or digital currency directly created by the Federal Reserve. Now, with that being said, they probably will have some sort of like internal digital currency that they'll use that I can imagine would be part of their system. And I could see how something like that could be established and eventually move into the broader economy. But at this point, like, as far as the legal authority that they have and the path of least resistance to be able to get a digital currency that is in play, being backed by the dollar, that has the Federal Reserve's monetary policy transferring into it, I don't see any other, like, this is what the Federal Reserve has said too, by the way. This isn't me making this up, right? And so, like, this seems like to be the obvious way that they're going to go about it. All right, I'm calling 6 and 9 on the die, gents. All right, let's see, what time is it? 11:40. Okay, I got another. Just watch the first 15 minutes if you don't want to watch long videos. Yeah, I mean that's all there is to it. Most of the information is in the first 15, 20 minutes of the videos anyway, and the rest of it is just discussion. So all right, where are we at here? Okay, Colin, fiber on the dice. Okay. I mean, where is all the money going? Bitcoin, silver, dimes. Let me shoot you a link. It was rather recent. What is Benny talking about? Just type like it sounds. No one really cares, and no one what you're trying to say anyway. Let's see here. Unless you're sleep deprived or English isn't your first language, no excuse for confusing the three there. Yeah, I'm probably sleep deprived. I would imagine that would probably be the case. Yeah. I mean, I don't sleep very well. We know that. Most of the people on this channel don't sleep very well. They were all up at 2 o'clock in the morning with me. All right. Someone has to be a dude. All right. Sorry for hijacking the convo. All right. Do you think home prices will drop like 2008 or continue to rise? I don't believe home prices are going to drop, especially not like 2008. Like, we have to think, what were the conditions in 2008 that are so much different from now that created the housing debacle that we had experienced? Now, one of the major things that we had going on was that mortgages were being created for individuals who never were going to pay them back. All right, like, they were not going to pay these things back. Never in a million years did they have the opportunity in their wildest dreams of being able to pay these things back, but yet they were created and put into the system. So for a time it looked great, right? And people were very excited about the housing market and how much, they could just roll these houses over and all that other stuff. But it was only a matter of time before those toxic mortgages were going to come to haunt the housing market. We are not experiencing that. Like, all the mortgages that have been created since the great financial crisis have only gone to pretty much qualified buyers, and you had to really qualify for them. Like, predatory lending and stuff like that had taken place back prior to 2008, that isn't taking place like it once had. So everybody who is getting loans is really only going to the most qualified people. Now, I'm not saying everybody is going to remain a qualified borrower. Like, there's conditions that change. You go through divorce, you lose your job, you get sick. There's all kinds of issues that will happen, but none of those issues are going to be, like, generally speaking, for the whole economy, unless you're talking about a rise in unemployment, which we are not experiencing to a significant level. I mean, yes, unemployment is rising, but it's not rising significantly. So again, like, what is it that was taking place in 2008 that was creating the issues? It was a bunch of people who were never going to pay back their mortgages, right? That was the issue. We do not face that same issue today. So as people are losing their jobs or losing the ability to make the payments, this is what we would look for in order for there to be, like, a housing market downturn. Now, let's say, for example, that starts to take place. Let's get the hypothetical situation that we are finding that people are losing their jobs on a significant level, and the idea that we have people who are getting close to losing their home or can't make their payments. Now, I think about it, like, myself, if I was in this situation, I just recently bought a home, right? So a lot of people are sitting in the same condition I am. You have to think, like, after I purchased my home, I got it at 3.125% interest. After that, all interest rates started to move up fairly dramatically and quickly. So there was a very short time after I had purchased my house that you may have been able to get a deal that was still fairly low as far as rates go, but it shot up fairly quickly, and everybody after that was buying into an expensive mortgage with higher interest rates. Interesting thing, not a lot of homes started selling after that, right? So there was a huge drop in the amount of mortgage issuance that was taking place. And you saw that by the mortgage lenders losing their jobs in a massive scale. So even though I had purchased my house a couple of years ago, since then, there's not like there's been a bunch of homes that have been sold at the elevated interest rates. Right? There's been a bunch, right? It's been 2 years worth of home sales, but the home sales have fallen off dramatically. Right? And what did we experience? We didn't experience home prices coming down. We saw them be elevated. So right now, home prices are higher than they were 2 years ago. Even a year ago, they're higher today. Now, granted, there are a lot of markets, there's a lot of places in which that the home prices have come down, but not significantly, and certainly haven't come down to what they were 2 years ago. Um, so again, let's take my situation for an example, and maybe people who are sitting around it. I lose my job, I lose YouTube, I'm sitting in a position in which that I'm not going to be able to make my payment. Right? What do? I put it out there on the market. Not only do I put it out the market for the ZELLE estimate, which is far higher than what I had paid for my house originally, but I'm going to put it out there for that price, and if it doesn't sell, I can knock 10% off of it and still be in a profitable position selling the house for more than what I had paid for it. Right? Now, I'm thinking, okay, what if it still doesn't sell? Well, now I can drop it even further, right? Because I can take it all the way back to the price that I had originally purchased it for, right? And get my money back out of it. Everything that I put into it minus the interest rates, right? The interest payments to it. So now I'm sitting in a position in which that I can just break even though I have taken tons of money out of this house. You could just simply sell it. And that's what I think like most people would be in position of, is that they could just simply sell their house off, and if they couldn't, they can keep discounting it until it moves. As people are watching the discounted prices, they may more likely jump on it, considering that the price is going back to what I had purchased it for 2 years ago. So this is the position that a lot of people are in. Now, let's say something else had happened. Let's say something else, hypothetically speaking, it went a different way. I had purchased the house and it had fallen in value right away. Right? Now let's say that had taken place instead. Okay? Then I would be in a position in which I would be underwater, and it would be very difficult to try and get out from underneath that house. However, how many people were actually buying houses at that exact time? Very few. There was very few homes for even sale back then. So even if you took like the year before I bought a house, right, and you said, okay, all these people are going to go underwater, there wasn't that many homes for sale, there wasn't that many people buying. It was the middle of the pandemic. Right? Again, I don't see any position in which that the people who have recently purchased a home is going to be so significant in the market that even if all of them, like everybody who purchased a home in the last 3 years went underwater, it still, I don't think, would drag down the housing market, considering that most homes are paid for. And I don't even know how many, like a third of all homes are being paid for in cash. Like, I don't see a position in which this housing market can downturn. What we experienced back in 2008, the financial crisis, was a housing market debacle. It was something that should never have existed in the first place, because those loans should never have been created for somebody who was never going to pay them back. But it was. So it created an obscurity within the housing market that found a very quick and dramatic unwinding. None of that stuff is taking place nowadays. What you're going to find is that there's separation between the rich and the poor is going to grow more dramatic, and you're going to find the obvious sign of a separation between them by the people who own property and the people who don't. That's what we have coming to our future. And already, even though right now you should see a housing market that is becoming more available for people, elevated interest rates should have brought the housing market down. Everybody said it was going to. Everybody said it. It didn't happen. It went exactly the opposite way. Housing prices went up. Home builders quit building. Less inventory was out there. Supply-demand issues. That's what really had taken place. And so to understand that, if you're going to own a home in the future, you're going to have to figure out some other way of doing it, because your 9-to-5 job isn't going to do it, because even a good job sucks. It just won't work. You're going to have to team up with other people. You're going to have to house hack. You're going to have to figure it out. It's not going to come from the 9-to-5 job that would typically have been used in order to acquire property. Like, that's the experience that you got back in the 50s, 60s, 70s, even into the 80s and early 90s. You could still do it. But after 2008, it became very, very difficult for the average 9-to-5 job to be able to provide enough to own, make payments, pay the taxes, do the maintenance, have the existence. It doesn't work like that anymore. Okay? And it's sad to say, like, there's nothing you can really do, because there's nobody you vote for that's going to change that. There's nothing that they can do. I do not care what this prospective president, I don't even want to say the name, has for an idea. I don't care what their idea is. No matter what you do, there is going to be a separation between the rich and the poor, and there's going to be no better sign of that than the property ownership. It's going to be very difficult for people to own property. It's going to be very much a renter nation. And it's not the way I want it to be. I wouldn't like it to be that way. I mean, ultimately, I would love for the experience for everybody to have is to say, hey, man, I can go to a 9-to-5 job. I can work hard for a living. I can focus in on what it is that I'm doing in my family and just put the money away into a Roth IRA and a 401k, and I can watch my football games and pay very dedicated to my job and my family and all that other stuff, and it's not going to work. It's not going to work. I mean, it might work for some people somewhere, but it's not going to work for most people everywhere. All right? And it's just the simple facts of it. It's the condition in which that this country has now moved into, considering that we have an incredibly high standard of living. We have moved into luxuries from foreign production, and this is the environment that we now live in, and we suffer the consequences of it when we think about things like owning a home. I mean, it seems like it should be an American right to have a place that you can call your own, your little plot of land, your place that you can call your castle, your personal little nation. But for most people, it's so out of reach. And if you look through history, that's the way it's mostly been. Very, very few rare opportunities is there provided in which that we have a regular average 9-to-5 job being able to provide that sort of outcome of having that house and family and stuff. We had it in this country. There was a very short timeline of experience that was the case. We've moved on. We've moved on from that sort of timeline, that sort of environment. We now have changed into a whole different realm. Where's that super chat? Let's go check that out. Angry Capitalist. I love the name. All right, what time is it? Shit, guys, I gotta go. Okay, it seems like housing will go sideways for the next roughly 10 years or so with slight variations in local markets. Boomers are holding, and millennials are trying to buy driving demand. Yeah, and I can see that happening. Like I could really see. In fact, George Gammon asked me about it a couple of years ago in an interview we had done. And, he asked me about the housing market and what I kind of suspected. And I said just that, like, it might go sideways for the next, 5, 6, 7, 8 years, who knows? But I don't necessarily see the housing market crash coming. And I see a more separation between the rich and the poor. And since there's no better obvious sign of a separation between the rich and the poor than the property owners themselves, that's what I see happening. I mean, there's going to be more separation between the rich and the poor, and if you have that, it's most likely going to be from property ownership concentration into the hands of a few, and that's what we are experiencing. Okay? Like, it's just the way it is, All right, guys, I got to go back to work. I hope you enjoyed it. Yeah, Uneducated Economist. Thank you very much for the super chats. Thank you very much for all those thumbs up. Thank you much for being here first thing in the morning when we were doing a live stream at 2 a.m. And thank you for continuously supporting the Uneducated Economist. Uneducated Economist, you let me know.